The 5 most important tax benefits that every multifamily investor should know about today, I would like to discuss those topics with you. As I mentioned in previous blogs several times, that I find extremely important for multifamily investors and operators to know about is tax benefits provided by multifamily investments. Just like any other type of investment, multifamily rentals come with their own fair share of tax breaks. You need to know about them if you want to be successfully managing and operating real estate in multifamily sector. Not knowing them could mean a huge difference of between paying and saving thousands of dollars in your taxes a year. Let me focus on some of the most popular. The first is known as the real estate depreciation tax. This is one of the biggest and best real estate taxes shelters for rental property owners. As suggested by its name, it's based on the principle that properties depreciate over time. The roofs, the appliances, the floors, everything inside these properties loses value over time because it's no longer as good as when it was first new. Therefore, the depreciation amount is a tax deduction that covers the whole property's wear and tear over time. Now, don't get confused. Despite the natural wear and tear, the property value tends to grow over time. Therefore, regardless of whether the property is making profits or appreciation in value, owners can deduct a depreciation expense from their real estate income tax. The second tax benefit that I want to mention is real estate investment tax deduction. What exactly is a tax deduction? Well, a deduction is an expense that is written off from a rental property owner taxable income. That law allows you to deduct the expenses that you incur to manage, repair, maintain your multifamily property. By writing off these expenses from your total taxable income, you can write off insurance premiums, management costs, utilities, marketing costs, like the video and blogs I'm doing now, maintain and repair. You can also deduct mortgage interest as you would with your real estate properties. Next, we have the concept of cost segregation. This cost segregation is similar to depreciation. The only difference is that it also involves the value depreciation of certain items that are very specific to multifamily rentals, like cabinetry, fixtures, appliances. For IRS purposes, these items have a shorter lifespan. That's why they allow real estate investors to make depreciation expenses written off on these items for a certain period of time. Now, when it comes to the cost segregation, there is a catch. Cost segregation often affects your tax bill. When you decide to sell that property, the more you use your cost segregation, the higher your tax bill will be when you sell. Let me jump into the next benefit. It is often referred to as the Section 1031 of the IRS code and also as a 1031 exchange tax benefit. The law provides that a property investor can swap their rental unit with a little or no capital gain tax obligation if he meets certain conditions. For example, the new property has got to be equal or greater value of the old one. The new property must be intended for productive business purposes, and both properties have to be like kind, meaning both are used for the trade or business. Now, there's also benefits from passive investors. It's called passive income tax benefits. If you are a real estate professional and you can demonstrate that you spend over 500 hours a year working on your field, a real estate professional is anyone who spends more than 500 hours in real estate annually and receives a certain tax benefit. But if you're a passive investor who is not dedicated to the work on real estate, you can still get lower tax bills. This is how it works. If you spend less than 500 hours in your real estate business, then you're obligated to pay passive income tax instead of a normal income taxes. However, passive income tax rates are lower than the federal income tax rates. This means that if you aren't a real estate professional, your multifamily real estate investment tax obligation will be much lower. So these are some of the most prominent tax advantages of multifamily real estate. If you like these topics, or if you're just interested in investing in multifamily real estate, please connect with me. Give me a call at 786-355-6646, or just shoot me an email or hit me up on social media platforms. Thank you.